present. Like, I mean, I can see you guys, Scott, Pam, and myself, Mike.
Yep, here.
Anybody else I may have missed?
Are you able to hear okay?
Yeah, a little louder would be fine, but I can hear one. Can I sit there?
Yeah, you can sit here.
I
Sit
would
at the head table.
recommend to them to get a line of credit.
Okay, the second item on the agenda is I'll go through the financials for the month of September. Third, we talked about a roof alternative at the last meeting, and Katina shared some information. I'll just bring that up and see where we go with that because there were two actions. One was for the committee members to review the information, and two, for Scott to get back to the insurance companies or insurance agents and ask them if that type of roof was acceptable for insurance purposes. And and we have that feedback, so then we'll review that. The fourth item is the line of credit, and that was Heskey, an action on Heskey and Sandra to look into that. And since they're both not present, then I don't think we'll look at that. And then the fourth item was any other business. Are there any other items that anybody wishes to discuss? I take that as a no. So with that, I'll kick off the meeting. So I'll bring up, let me share my screen. Can you see this or I've got the treasurer's report. Maybe not.
Not yet.
Okay, hold on. I forgot to click on screen. Share, and I have to click on the share button. All right, now we're cooking. All right, so for those who are new to the meeting, I was asked maybe months ago to prepare a simplified version of the financial statements. There's the full package is available on Building Link, but this is a snapshot on 3 slides. And the purpose is to kind of demystify all the numbers and not weed through all the details, but to get to the high level. So the three parts are the income statement, our operations, both from an income and expense point of view. The balance sheet, how much assets or how many assets we have and the value of those assets. And the third item are the reserve accounts. And we have three reserve accounts, the special assessment that was assessed a few years ago, the SERS account, and the non-SERS expenses. So with that, I'll begin with the financial statement. And high level, if you look at the 2025 actual September year to date, total revenues are 5.347 million. Our budget year to date is 5.139. So we're better than budget by 200,000. And essentially that is the interest income that's earned on the money we have invested. So when we did the special assessments, as we're accumulating reserve balances, from maintenance fees, then we haven't used as much as we thought. Namely, some of the projects haven't been executed as planned. For example, the elevators aren't finished yet and the roof hasn't started. So with that, we have that money invested and we're generating 200,000 of interest, which ties into the 208 variance. On the expense side, if we look at the line called total operating expenses, year to date, we're at 3.6 million. Our budget is 3.6 million for the 9 months ending September 30th. So we're pretty much on budget. We have a gain of 3,000. And if you look at all the line items, we're making gains of 61,000 on salaries. The insurance is far lower than we had anticipated. The market has indicated that rates have come down, especially on property insurance, and continue to do so for 2026. So we're between those two, we're gaining 200,000, which is great. Contracts, there's one variance there, Scott, that I kind of lost track. It's 35,000 variance, and that's related to cable TV and internet. I thought it was an accrual error, but I thought I saw an email indicating that maybe it's not. So I don't know if you've had any discussions with First Services Accounting and Sandra to,
So I'm not sure if it's an accrual error or because December 2024 was paid in January 2025.
yeah, that's what I heard. There'll probably be an extra month this year because we missed out the
Yeah,
last
because
payment.
their billing cycle ends on like the 28th of the month. So it's always getting carried over into
Right.
next month.
So maybe take an action to follow up with the folks at First Services Accounting
Yeah,
and Sandra. And so next month, when I produce the report for October, I'll indicate whether it's a timing gain, timing loss, or not.
yeah.
The other expenses are in line except for administration and others. There you see an unfavorable variance of 154,000. So everything we've made as far as gains in salaries and insurance are kind of offset by the administration and other. And on the right-hand side, you'll see which line items in that group account for the variance. Legal has cost us 55,000 more than planned. Professional fees is 54,000 more than planned, and that's not necessarily a bad thing. These are professional fees related to the projects that are either ongoing or in progress. And the old accounting rule is if in doubt, expense instead of putting against capital. So we've expensed 54,000 more than on professional fees, and those are engineering fees, consulting fees, and whatever else.
So,
Taxes are 33,000 unfavorable, and that is because we did not budget the revenue, so we haven't budgeted the tax expense either. So I mentioned previously that our revenue was around 200,000, less than 33,000, so we're still to the good of 167,000. And dues and subs is up 11,000. I think that's just timing at this point. If we look at and I'll take some questions after I finish the next couple of lines. If we look at SERS and non-SERS reserve funds, we have 1.7 million actual year to date compared to a budget of 1.5. And again, the whole difference there.
Must be Scott who can do it, right?
Sorry, there's some background noise. The whole difference there, the 198,788, is made up of that interest revenue or income that we had not planned for. All that to say that at the end of September, we've added 12,729 to owner's equity for the current year. Any questions before I move on to the balance sheet? And we'll take questions from anybody who's on the call here at this point, but any questions or comments? Okay. So if I go to the second page, which is the balance sheet, this is the equity and the assets we own as members. The first three items are cash, and we have cash accounts itemized in three areas for our day-to-day operations to run the building. Our special assessment account, which we assessed a few years ago, and the current SERS and non-SERS reserve amount. So between the three, we have almost $11 million in cash. So hence, that's where we're earning our interest revenue because we have these amounts invested. Receivables are down to 32. Prepaid insurance left for this year is 800,000. So total assets is 11.8, of which 11 million is almost 11 million is cash. And when we look at the liability side, we have insurance payable, deferred revenues, accounts payable. Those are they're normal amounts, nothing exceptional. And then we have our three reserve accounts, special assessment, SERS, and non-SERS, which I'll get to in the next page. So for liabilities of 11.3, so the difference between our assets and our liabilities is what we as owners actually own at the end of the day or have to our equity, which is 500,000. Any questions or comments before I move on? Well, silence is golden, so I'll keep going. The third page are the reserve accounts. So again, three categories, special assessments, the SERS and the non-SERS. What we have on the first column is what we ended up the year with last year at December 31st, 2024, what we spent in the first 9 months of this year, and cumulative, where do these projects stand? So the first category, special assessments, we essentially had three main activities in there: the concrete restoration, the elevators, and the roof. The concrete restoration is finished, so that ended up at 4.40 million. We had budgeted 4.9. the project budget. So and the contract was actually 4.6. So we're good against the contract and we're good showing a favorable variance against the project budget. Of course, the excess amounts when the projects are completed stay in these accounts and can be used for other projects. The elevator, so far, we've spent 1.8 million against the budget of 2.7. Scott, correct me if I'm wrong, but I think there's another outstanding payment or two to be made that brings us close to that 2.7.
Yeah, there's one for, I think it's like 47,000 that we have been holding off on just because we've been having issues with that
Right.
number 2 and 3 elevator. But there is, yeah, a pending one out there.
So if that 300,000 gets resolved in our favor, then we should save 300,000. But I guess that's going to be decided in the coming weeks and months. The roof, we've only spent 11,000 so far. As I mentioned on the income statement, some of those expenses in terms of preparing the RFP, in terms of evaluating the alternatives and looking at what we need, coming up with the requirements, the engineering fees or the consultant fees have been expensed. So that's why we're not showing anything here. But the latest I hear, the project budget is 2 million, so we still have 2 million set aside for that. And we'll see when I believe the bids were scheduled to come in this week, so we'll have a better idea of what that project's gonna cost us at the end. And then the other category is PM, project management, engineering, and admin, and we've spent more than we said we were going to spend. We're at 478, 479, and we were supposed to be at 381. So we're about 100,000 over budget on that one. Any comments on special assessments before I move on?
When is the special assessments coming?
No, that already happened. So that was 2 or 3. That's the one that we had 2 or 3 years ago.
Oh, that was a long time ago, yeah.
Yeah. So we just, and that special assessment was for these major projects. In part, some of it was funded by our reserve funds, but some was it wasn't enough. So that's happened. So there's no, just to be clear, there are no new special assessments.
That's correct, because we got a lot of money in reserve.
Yes, exactly. So that's a good point because given that, then when we've put together our 2026 budget, we certainly considered that the amount of money we have available and some of the equity that's available to us. So we drew on some of those things for 2026. If we look at the SERV's reserve fund, so SERV's is the account that captures the major building related projects that really are necessary. So the statutes, the government regulations indicate that all the necessary items have to be addressed and taken care of. As per what we do is a reserve study, and as per that study, then of course, if there's an estimated useful life and if we're close and the asset is near the end of that life, both from a book point of view, but more importantly, from a utilization point of view, then we initiate those projects. So far this year, we started off with a balance of 3.6, almost 3.6 million. From the maintenance fees, we've added 1.2 million. We've earned 328,000 of interest, and we've only spent 10,000 on that. So we're sitting pretty good with a balance of 5 million for major projects, if I can call it that. Non-major projects are non-SERS reserve fund, and those are things that are like the trash chutes, doors, maybe stuff like that, which are more not structural in need, but are part of a building nevertheless. We started the year at 1.2 million, almost 1.3 million there, 1284. We've added 300,000 from our reserve maintenance fees. We've earned 170,000 of interest. We've spent 118,000 for those projects, leaving a balance of 1.6 million. Any questions or comments?
Yeah.
Okay, that wraps up the financial part. The second item on the agenda are the is the roof alternative. So at the last meeting, Katina Zoria, who worked at I think Bosch it was, uh, and is on the committee, on the finance committee, she said that when she was working at in industry, they use a silicone type roof for roof replacement. And she said it had worked very well and what have you. So we said, oh, that's sounds interesting. And it was a fraction of the cost of a regular tar roof. So we discussed that and said, well, let's review the materials she sent us and let's discuss it at the next meeting, which is today. But before we do that, we handed Scott an action to check with the insurance our insurance broker to find out if these types of roofs are acceptable from an insurance point of view. And the feedback on that was twofold. One was that if it's a true silicone roof, or is it or is it just like a maintenance? Are you just coating something, or are you actually replacing something? And the answer is we're coating something with a silicone roof. So then they said, well, for us to make a proper evaluation, we would need the specs to do that. And if it's coating, it's considered as maintenance, and the insurance companies do not extend the life of the roof or do not reset the roof life based on that. Scott, have I captured that correctly?
Yeah, I mean that's the same
You-
thing I was getting out of their
Yeah,
emails.
If
yeah.
I can say,
So given that, I'll just run through the comparison between a tar roof and a silicone roof, and I'll bring that up. So this is something that Katina sent to us, silicone versus tar roofing. So on the left-hand column, you see the lifespan. Silicone roof can last 10 to 20 years, whereas a tar roof, hot tar roof, 15 to 30. The initial cost is generally lower, typically $3 to $5 a square foot. Tar roofs are more expensive, $4 to $10 a square foot. The application for a silicone roof is faster, simpler. Tar roof is more complex. And from a water excellence resistance, good resistance. So it sounds like silicone roof is even better from a water point of view, and UV resistance superior and good. So in summary, the silicone coating often is more cost effective and adds many years to an existing roof. The hot tar roof has a full replacement system. It's more complex to put in. It's a bit more expensive, but from an insurance point of view, I think it covers us better. So I don't know if we should
Walden?
No.
push this to the next meeting when more of the finance
Hello?
committee met.
Oh, I'm here also.
Oh, you're there, Katina. Yeah. So
Yeah, I
great.
am here.
Yeah. So maybe you want to add some context or flavor to this.
Yeah, I also
Please.
talked again to our, we placed this 4 years ago at the place that I retired for. It was on one of the big projects. And we did have Allianz as insurance. And we were able to prove to the insurance that this was a better option, and they accepted it. The best part about this type of roofing is it doesn't require replacement of the old roof. So it totally saves you the whole process of pulling the tar roof out. And because it's silicone, it melts and you can apply it every time. Yeah, I mean, I'm not an engineer, so this is what I had from
Right.
what we did.
Can I get involved with this, Kathy?
Sure.
Hello?
Yeah,
Yeah,
I'm
what's the question?
This is Alex. Can you hear me?
Yeah,
Yeah.
sure. Loud
Yeah.
and clear.
First of all, the existing roof is totally saturated with water. All the insulation is totally saturated. So
Okay.
even if you cover it up, what are you going to do? You can put a roof on top of
okay.
water?
No, okay. Then it needs to be replaced.
All right, so that's part of the issue. And then you have wind uplift. If we don't have the proper adhesion to the existing roof, you might have problems with the wind uplift.
Well,
You understand?
yeah, Alex, though,
Yeah.
in West Memphis, the wind, the tornadoes, and it's a tornado alley. So they had similar issues in, I don't know much. I mean, I think we should get an expert at least who's real good at these types of roofs. That's what we did when we replaced it. But the cost difference is tremendous. And the maintenance is tremendously
But
different.
again, the existing roof is totally saturated. So what are you going to do with the wet insulation?
I know they're wrong.
Hey,
Scott. Alex, Glenn Schreier, Unit 107. I've worked closely with Amigo Roofing. I was president of an association over in Victoria Park. He would come and give us a free estimate and tell us if it can be done with just the silicone coating. Because I've seen it done. I've seen it done very effectively. It's very expensive to rip out and put in an entire new roof.
Well, that's what our engineers requested, and that's what our engineer approved. I mean, we were going to put a Hypalon membrane, and now we went back, which was more expensive, and we went back to a modified now, a torch-down modified, what everybody's using in South Florida. Like I said, I've been on the roof. The whole roof is totally saturated with water. So how are you going to put a silicone roof on top of saturated water insulation?
Yeah.
I can't figure that out.
So I would defer to a roofer.
Yeah, so
I am a roofer. I was a roofer.
Okay.
30 years.
Let's pull in another roofer, somebody who's licensed and currently working in the state of Florida. I know this guy. He does great work.
Yeah, but you know what?
Yeah, I mean, at the end of the day, what do we have to lose by asking somebody?
Yeah,
yes or no? And if
understand.
they say no, then we haven't lost
Because
anything.
the water's on the roof? That's the conclusion?
So it's not just water on top, all the
That's it.
insulation underneath the actual roofing system is
Saturated.
due to years of leaks.
So they're saying we have no alternative but to replace it?
That'd be the proper way is to replace the entire roof with the insulation and everything. Again, the whole insulation has been delaminated from the roof deck. So if you put a silicone roof on top of it, if you get a high wind, it'll bring you an uplift. It'll tear the whole roof off. These are things. This is called FM requirements. This area, South Florida, we have to put roofs here that can handle 180 miles an hour wind. That's what the requirement is. I mean, we went over this. I went over this all with the engineers and the architects.
3 years.
I've been working on this for 2 years now. Now I don't. We're gonna have bids next week.
Where's everybody been for the last 2 years?
Everybody's coming out of the woodworks now.
Well,
we just saw the budget.
Alex,
We saw how the budget's being.
A lot of money.
yeah. So Alex,
a lot of roof.
we certainly appreciate you being at the meeting and having you're an expert in some of these areas, so your feedback is very valuable.
I've done
all we're saying is, hey guys, is it worth looking at this and getting a second opinion? That's all we're saying.
Well, this would be a third opinion.
Or a third opinion or a fourth opinion, wherever we're at.
We can have 30 opinions, but we'll still have an old roof. That's the problem. So we have some leaks, and
all right. So
we keep on patching the old roof over and over again. So that roof on top is all. And the other problem we're having, due to the saturation of the insulation, we've made low points in the roof. So now the water's settling in areas that was patched up. So there's more to that than meets the eye. So
All right. So maybe we'll just take one more opinion here. There's a hand up. So
we'll get the bid results next week. And if Scott can attest to this, they wanted to put tapered insulation, and originally the tapered insulation would have been in areas of 12 inches of insulation. This is absolutely not. You have to go with the standard job that was 1.5 inch rigid insulation that the building was built with. And by doing that, the engineer said we could save our costs is probably 30 to 40% lower from the original cost. So
okay, well, you certainly made a lot of good points. There's one hand up, Mr. Barrett. Brett, I think.
Yeah, I mean, I agree with Alex in that I used to work for a building envelope consulting firm in Seattle for quite some time, and I agree that where I've seen this system be used is where you want to get another 5 years out of a
Right.
thing. I've seen it like right after disasters where, you just want to put in something temporary over a hospital or things. But I think Alex is to the point is that the issue isn't that the roof is only leaking, but it's that how everything's glued together and glued to the deck. So if you put this system on, then the top layer that's not going to, because our assembly is so weak, is what I think Alex is saying, is that the insulation is supposed to be glued to the deck,
Right.
and then the black stuff is supposed to be, glued, for lack of a better word, to the insulation. And our insulation isn't glued to the deck anymore. It's delaminated. It's lost its structural integrity. I mean, I haven't been up there, but I can just tell you based on everything
Right.
I've read about it. So I mean, if you want to bring the salesman out, I'm sure they're going to give a nice song and dance. But based on everything I've seen, the direction we've been building, that it's that you say changing this roof to this new system really isn't pragmatic or applicable to our building. But I would say is that I really think, and I don't know if this will happen when the board changes this year, because I've heard some people retiring, but I do think we could do a better job of managing our consultants. And because I think we've just settled into a mode that, oh, we're spending 10 grand a month, and that's okay. So thank you.
Thank you for the feedback. I mean, you guys are experts, right? So you've seen this. It sounds to me like this could be a solution that could have been contemplated if our roof maybe was half its age or.
Well, but if our roof was half its age, we wouldn't even be wanting to do it. I think it's something that one would consider. But as I say, I can't imagine any building of this type ever. I mean, unless you wanted to be the laughing stock of the next roof convention. I'm sorry. Thank you for letting me speak.
I was involved in the National Roofing Contract Association. I was a roofer for 35 years. The issue here, this roof was put down in 2007. I have all the records. And the way it was done, completely removed roof, down to the concrete deck, repair all the concrete slabs, repair all the spoiled concrete, prime the deck, install the adhered insulation, and on top of that, put your modified or your torch down or whatever membrane you have. It's a fully adhered system to the concrete deck. Now that the roofing system is totally saturated with water, that adhesion has disappeared. So that's going to create a problem.
Okay, well, thanks, Alex. I don't know. I'm convinced that we'll go the way you guys are planning to go, Alex and the team. Katina, do you have any concluding comments or?
Well, wouldn't it be nice to get a couple of opinions, advantages, disadvantages, how much is each going to cost, and how much is the insurance going to cover, which one insurance is going to cover more, and present it to the owners.
I would just remind you that we had one roof consultant or a roof engineer. He never mentioned, right, but he never mentioned the system. We had a second roof engineer, never mentioned going with this system. Quite frankly, you have Alex, who's based on his qualifications he's presented. He's saying it doesn't make sense. And quite frankly, I have my certified construction. As I say, and I was worked for a building envelope consultant, and I've done, major building envelope work on condos, hospitals, and I would never consider this system. So I think you have 4 independent people who say we need to do a real roof. And quite frankly, neither Alex nor myself, Brooke, have been known to be big spenders.
Well, Brooke, there's a fiduciary duty owed to the owners to see the bids and to get independent analysis from experts that are not on the board. I mean, I just think it's clear.
We did again. We got two consulting engineers that were involved in this project.
Well, the 2 guys sitting here in the room, and it's only us and Scott. We haven't seen them. So how did the owners get to see it?
Well, they were meetings all the time. You didn't attend to them. They were open meetings. So, if you weren't paying attention to your emails,
why can't we see it right now?
what? There have been meetings over the last 2 years. 2 years.
Scott in the
I,
meeting?
I understand, we have two experts here. I 100% agree with, I know Alex and everybody else, but it's imperative that we present it in a better way to the owners.
I think that's what Alex is saying, is that we've had two engineers who were professionals, not Brooke, not Alex.
Right.
Those two professionals reviewed the roof, and they did not say that this thing was a good solution. I mean, if you want to bring the salesman in and have him give a quote, you can do that. But essentially, a salesman is probably the most most
salesman. I mean,
what, Glenn?
We actually even had a town hall where we had the engineer and two different roofing companies come in and explain different systems to everybody. I mean, we have gone through this.
We had John.
Yeah, okay. Well, guys, your opinions are valuable. If we've gone through the process, then I understand, and we're not going to go back in time and redo with this. At the end of the day, we're looking at, let's get the bids in, and we'll go from there.
We had John Mansville, which is the biggest roofing company in the country. Been in business for over 125 years. They've done millions and millions of square feet of modified, of torch down, of single ply, of 4-ply. You name it, they've done it.
Right.
And they were at the meeting too. We had Supremo that's given us a prize. We had Fiber Tight, which is a brand new system that just came out that all the new buildings are using. But it was very expensive, and it was very complicated, and would have cost us more than we had budget with. So there's 100 different types of roofs.
Right. How much is the budget for the roof?
$2 million.
$2 million.
Yeah.
$2 million.
So just for the record and to set the record straight, we have no salesperson chasing us with this idea. So Katina, in her role as CFO in her previous company, said that, and it's a big company, you can mention who that is, Katina, said that they were doing this in some locations. So that's what prompted the discussion. Hey, is this something that's up and coming or what have you? And that was the whole essence of it. But there's no salesperson after us ready to.
Oh no, I meant as a next step would be to go to the salesperson. I think it's great that the idea was put forth and talked about. I really think it's a great idea. And Glenn, I guess to speak to your point, when what a roofer does, which is a little bit different than attorneys, but what the roofer does is they produce a specification, and by means of both roofers producing two different specifications. I think the first roofer wanted the Fiber Tight. The second roofer wanted the Canadian Suprema product, which I really like. And but by them specifying that, they were saying that this is the best type of system to use. And we also have the other voice, which is the insurance company, which says that, hey, this would be non-standard for us to approve this as a brand new started year zero system. And part of the reason why I am actually pro Suprema for our roof is that it sounds like the insurance companies are saying, hey, when your roof gets to be 20 years, whether it's Suprema or if it's the Fiber Tight, we're going to prefer you to get a new roof. So if the insurance companies are saying, hey, get a new roof in 20 years, even though we could have a roof last 30 years, then it seems to me to make sense to go with the Suprema system. So I think we really have had 5 voices look at this, and I think it's great that somebody brought it up.
Well, in my experience, I defer to experts always. So we have 2 bids from people that are not on the board or live here. Why not get a third? Why not get a third?
No, we had
2 engineers.
We've had 2 engineers. We're getting like 5 bids for the roof. 5 companies have come out to bid the roof.
Okay.
Yeah, I think we fixed the roof. If I can remember correctly, 2006 or 2007 or 2008.
It was 2007.
And I think it hasn't even been, 18 years, 17 years?
Yeah.
And that didn't last. How was that built?
It didn't last because a few years back, maybe 10 years back, the one of the committees, they canceled the maintenance program for it. Because whenever you get a roof, you should have a maintenance program with it. And they canceled it before they did the I believe it was the what do you call that? The lobby renovation to do some cutbacks. And that was one of the things that they cut back.
So
okay, so they let go of a maintenance, they let go of a maintenance project, a maintenance contract, which didn't allow for the roof to last as long as it should have.
In the $2 million budget that you are proposing, is the maintenance involved in it?
The maintenance, I think, is $2,000 a year. Am I correct, Scott?
Yeah, and that, I mean, because we're getting a roof in 2026, you know, a maintenance wouldn't start until 2027.
We get it.
I mean, there's going to be a warranty on the roof too.
There's a 2-year material and labor warranty, and then there's a 30-year, a 20-year for material that fails and system that fails. But if you have a maintenance warrant guarantee, they'll come out twice a year, inspect the roof, and give us a report on the condition that'll extend the warranty. And that's $2,000 a year.
That should include minor repairs to like flashing and blistering or whatever.
What will the insurance cost?
Okay, well, yeah, you know, we can debate this all day. We can't do anything about what's happened. We can only look forward. And at this point, to me, it sounds like that train has left the station. And thanks for all the feedback. Before I ask the Finance and Insurance Committee members for their final say, yeah, you know, that's my opinion. But Katina, what do you say?
Next.
Do you hear me, Katina? You're on mute. So, Pam, any comment, any opinion? You're also on mute.
For me, no comment from me. I know that it's been extensively researched. It's been over 2 years. As everyone was saying, there has been meetings, there has been a town hall.
All right. Scott?
No, nothing from me.
All right. So nothing from you, Pam, and Scott means we continue going with the current initiative of receiving the bids and evaluating them, and then picking the best one. And hopefully the best one is the one that provides the most value at the best cost. So as a finance committee meeting, we'll review some of those bids as well and provide our perspective and our opinions.
A part of this, insurance doesn't cover it.
All right. Katina, I don't know if you're still there or not, but if not, thanks for digging up this information and giving us something to debate on, which is what we need more of. With that, then there's no other items. The line of credit.
Yeah.
That was an action on Sandra and Heskey to look at possibly a line of credit. Since either one is not at the meeting, then we cannot address that. So we'll carry that forward.
I have one question to you guys. As a finance committee, you guys are the ones that prepare the budget?
Yes.
And you present that budget to us.
Yeah, so at the budget meeting on the 18th, I'll be presenting.
How often do you work on that budget, and is there a break? You know, like you mentioned, $1.2 million in payroll expenses, and maybe it's going to go up another $170,000.
Yep.
Do you have a breakout?
Absolutely. Yeah. So we've gone through 7 reviews of the budget. The process started.
It's very high.
Pardon?
It's very high.
Yeah. Well, listen. We have a special budget meeting, so we'll go through all the details. We're not going to please 100% of the people with it, but I mean, there's a rationale behind it.
Everybody into your budget meetings.
No.
When you have
Oh,
budget
well,
meetings,
then I would invite you to join the committee next time.
yeah,
You have
Yes,
the opportunity.
all 7 of those times we've reviewed the budget, it's been open to unit owners.
you inform us.
Yep, just like this meeting.
I tried joining committees and I wasn't selected for any of them. It's interesting how it works.
Listen, I'm from Canada. I joined I put my name down
finance
and
committee.
I got picked right away. I wasn't known by anyone.
I have
So, it's, I don't know, it's the luck of the draw.
I
But,
I never got any notification about it.
Yeah, yeah,
You don't have to be selected to attend any meeting. They're all open to residents.
yeah. Well, I have
Board
United
meetings.
I like to attend your meetings. I've
Okay,
been in this
well,
building for 34 years. And when I look at the budget, it really, really upsets me.
That makes
okay,
two of
well,
us.
you'll have a
Frustrating
chance to
upsetting.
express that
And,
opinion at the budget
so-
meeting. We'll go through the rationale. I'll go through the rationale and certainly we'll welcome comments and you know,
Yeah, yeah, no, I mean, it's our fault not to get involved. I think it's my fault, or it's our fault, it's the people.
yeah, we certainly appreciate and solicit any information we can get from the owners and during the process. And like some of the people said on this call, we've had several of these meetings, and this has never come up so far.
I see several, now that I'm retired, I walk around, I see several monies that are wasted and in building things that don't work, such as the light in the garage, such as the door.
You know what I would recommend? You make a
Such as-
list of those and give it
Somebody's going to get into an accident in that light in the garage. Nobody comes out anymore. It's not just the employees. They're constantly revolving. Nobody knows how to put the barbecue on. Nobody comes on time. Nobody sends email.
Well, I'm not sure the finance and insurance committee
You know, I mean, I noticed so many things, and I don't want to open up my mouth.
Can you give me a chance to respond to your rant?
Yeah, I
I'm
don't
not
want
sure
to.
anybody from the finance and insurance committee meeting can tell you how to turn the barbecue on, but if you have ideas, cost reduction ideas, what you're seeing,
Oh, yeah.
come to these meetings and give us the list. We'll act on it. We'll look at it for sure.
Yeah, yeah,
And we appreciate that feedback. So,
Yeah.
and that's the whole purpose of these committees is to get the feedback and the input of the owners because it's the
Wonderful.
owners that are responsible for everything that goes on in this building.
Yeah. I will be much more involved.
And I appreciate that. Thank you.
Thank you. Thank you, guys.
All right, so that's with that, I'll call that we adjourn the meeting and again, big thank you.
May I speak in the open portion of the meeting, please?
Yes.
So Mike, I did attend the meeting a couple meetings back, and you did have a very tight agenda, and so I didn't really get a chance to speak about the reserve study. And I just again would like to emphasize to you that, I know Vince was willing to go help improve the reserve study. I'm willing to help improve the reserve study. But the other thing I just wanted to emphasize, and like 20 years ago, I actually did do reserve studies for a little bit when we did our building envelope consulting. One of the things my boss was good
so
at.
Brooke, the timing might be great here because we're going to be doing another reserve study in 26 and to solicit and get your feedback would really be useful.
But what I was going to say is that it's important that the board or the or the members or whomever, we really need to get better input on some, like there are some items which a reserve company should be good at, which is like mechanical systems and this and that. But like one of the things I noticed was like they had us replacing the tile in front of the elevator on floors 2 to 28, like every 10 years or 15 years. And quite frankly, that's probably not necessary from a lifespan of a tile perspective because they're very resilient. Like you go to Pompeii, they're 3,000 years old. And quite frankly, they do tend to hold up. Now, aesthetically, we may be a building that says, no, we're going to want to do a major refresh every 25 years. But like when you read our current reserve study, it talks about how Marcella led them around the building and this and that. And like for the lobby, it had us like we did a major lobby redo when we redid the lounge, the kitchen. We had to make our bathrooms ADA. So it was a really huge thing. And I don't think it's the type of huge thing that we're going to be repeating on, but they plugged that number in. And so, we really need to get a committee, even if they understand that it's hypothetical. Like at one point, we had a design committee, and a design committee would be very good at saying, okay, these couches we're probably going to want to replace every 10 years. Right. And we're probably going to go to this kind of a manufacturer. And so we really, if we're going to have a quality reserve study, we need to get more owner input involvement and temporary
100%,
decisions.
Brad, 100%, and I agree with that. So,
because like right now,
let me just highlight what the timeline is and what our thinking is at this point. Certainly subject to input from the owners. But so we've put some money in the budget for 26 to redo the reserve study in the mid-year so that we have it in time for the budget exercise next September. What I can tell you is that we'll have one of these finance and insurance committee meetings. We'll dedicate it to the reserve study before we mandate whomever to do it and get the input from the members or the owners so that we can ask pointed questions or provide some guidance and direction. So absolutely, that I think that's the whole purpose of this committee is to do that. And it's a channel for the owners to use. So absolutely. And if you can provide that feedback, so, we'll probably have that special meeting or that special session of the Finance and Insurance Committee meeting, probably in the April timeframe, I would say. And then we'll please participate or send some of your comments beforehand if you can't make it. But that's exactly aligned, Brett, with the way we see these committees working, and this is the conduit into the board. All right. Thanks for your feedback and your input, and with that, I'll adjourn the meeting.
All right. Thanks, Mike. Thanks, everybody.
Thank you.
Take care, everyone. Bye-bye.